Hey friends, there's a cycle. It involves 12 steps, and it keeps repeating over and over in most of our lives. It's actually kind of sad, but there is a positive note here. It is possible to break the cycle, to break free from it with dividend stock investing. But check it out on the screen in front of you right now. This is the cycle that most of us face in this complex modern world. You can see in the cycle there's 12 steps. It works like a clock. You go through this cycle over and over. And there's kind of three seasons. There's the green arrow season where things are kind of okay in life. There's the yellow arrow season where things are kind of going not quite as good in life. And then it goes to kind of red alert. There's the red arrow season. That one is kind of steps 10, 11, 12, kind of that range in life. And it's red alert. It's not good. Things get bad. But then it refreshes, and we repeat this cycle over and over again. Sometimes the cycle takes a long amount of time. Sometimes the cycle, it can repeat pretty quickly within a matter of weeks or months. I want to share this with all of you today because I've lived through this. This is for some of my younger subscribers, folks watching today who might be in their 20s or 30s. But I do think the knowledge here is valuable for everyone. I think it's important for all of us to realize that we are facing this cycle and that it's so important to invest wisely in dividend stocks and to allocate extra capital, because I think a lot of us forget that we're in this cycle. This is going to make a lot more sense. Check it out on the screen right now. I'm just going to go through this thing. And so in step one, hey, we're feeling really good, perfectly healthy. We're in step one. We're starting the cycle. Step two, hey, we have a job. At the job, things are going really smoothly, if not easy. There have been times in my life when I've been in a job and it's going so smoothly that I'm like, hey, I can make this work in perpetuity. It's no problem at all. But as you can see on the screen in front of you right now, usually there's kind of a step three. And the job, it's still going smoothly, but you're given a few more assignments. But you got this. I have some sticky notes in this cycle. You feel really great. You kind of forget about the rest of the cycle when you're in this green season. Even if you've been through the red season before, you forget about it because you feel good. You can go on like this forever. And so you're kind of in step three, you're given more assignments. Step four, you're starting to face some challenges in the job. It's okay though, you're still in that green season, but hey, maybe it's a challenge with colleagues. Maybe you don't like your coworkers, you don't get along with them. Or I have some other examples here in the sticky notes on the side. You get a new boss who's really terrible. I think that's happened to all of us who have been working a long time. Or the numbers at the company, maybe they get really bad and they may have to do possible layoffs. And so here's a hack, by the way, when any of us are in step four of this 12-step cycle. Stay out of trouble at work. Just being in favor is more important than anything. I'm here to say I've been through this cycle so many times. I've worked a lot of places in my life. I've seen other people and I've compared to their strategy to my own. I've learned a lot over the years. And one thing that I've learned is at work, you can be in favor or out of favor. Try to stay in favor. The way you stay in favor is by staying out of drama and just staying on everyone's good side. This is even more important than work output. Of course, work output and quality and all of that matters, but how you kind of are perceived in the company, being in favor or out of favor, boy, that's even more important in my opinion. But that is a side note. I want to keep going. As you can see here, this is interesting. This is kind of life here, everyone. And you may not even realize you're going through this, but I think you will. I hope this video kind of makes a lot of people watching it question things after they go home and they start thinking about how this applies in your own situations. But step five, you're kind of realizing, hey, the job, it kind of stinks. So you start a side hustle and you're kind of motivated about that because you're like, hey, yeah, I've got this job. I've got more assignments, got some problems there. Company's not doing so well. You know what? It's pretty easy. I'm just going to do a side hustle. I'm going to make more income. And maybe one day that side hustle can become a full-time thing. But step six, hey, you realize that the side hustle is way more work to make any extra money. You realize that these make money online, quote unquote, gurus, they make it look so easy, but it's not. You start questioning what you see online and you're wondering, hey, are all these people telling me online I can make money online? Are they always telling the truth? Is it really as easy as they make it look? Because, hey, when a lot of us try it, we try these side hustles, these things, it's not so easy. And in fact, oftentimes it involves making less than the minimum wage. It would be easier just to get a second job in addition to the primary job than starting a quote unquote side hustle. But there are those that make it work, of course. There are always those corner cases and those people who make a side hustle work and they turn it into a full-time job. And hey, I am wishing everyone in that situation and the situation where the side hustle did not work all the best. But let's keep going. As you can see on the screen in front of you right now, I have a lot more to share. So what happens in kind of step 7? You start staying up late at night. You lose a lot of sleep. Why is that? Because not only do you have a full-time job that now has more assignments and a few challenges, possibly with colleagues or numbers or your boss or a number of other things, but your side hustle that you've started is taking up way more time than you thought, and it's not producing the results that you were hoping for. You're staying up late, you're trying to make it work, but with less sleep, you start wasting a lot of money. I have a sticky note on this at the bottom. You're wasting money. You're wasting it on takeout food. You're compensating kind of for your lack of happiness in life with material objects. You're spending money. And so you're moving into this yellow season here. You're kind of in the thick of this yellow season. Things aren't so bad yet. You're making it work, but you're trying to kind of figure out life. And then you happen across something called dividend stocks. You realize this could be the answer, and you get excited. You have dividend stocks. You realize, though, in step 8 that it's great, but in step 9, you realize just how much sacrifice it takes. Boy, to build a portfolio that is massive enough to pay all of one's living expenses, let me tell you, it takes a lot of time because I've been working on it. I continue to work on it. My expenses of living have gone up over time. Of course, now I have a family to support. And so there are expenses in life. And of course, we have all faced inflation. We have seen the rising costs of everything, but it's possible. It's a very noble effort that is possible, but I think all of us at one point or another in the journey realize, hey, this dividend investing, it's not only going to require sacrifice on spending and on kind of lack of lifestyle inflation, and maybe even taking a step back and downgrading one's lifestyle. I haven't been able to do any of that. That's why one of the reasons it's taken me longer is because I haven't done that. But I think we also all realize as well that the compounding machine, the dividend snowball, it takes time. The reinvestment, the dividend increases, the addition of new capital, it works, but it takes time. And of course, that snowball grows really quickly once you've been at it a longer amount of time, especially after 1 decade, but certainly after kind of 15 years, 20-year mark, boy, it really is magical, but it takes time. And so as you can see on the screen, at this point, I highlight the dividend steps in green because these are the most awesome parts of the cycle. But hey, you move kind of into step 10. You're getting sick. You come down with a cold, a bad sickness. You don't feel good. You don't feel good at all because you're balancing the job. The job's gotten harder. You're balancing the side hustle. The side hustle's a lot of work. You're staying up late at night. Yes, you've kind of found this silver lining called dividend stocks that could change the game and break you free from this cycle of modern life, but you are so extended that you get sick in step 10. And then in step 11, boy, you start realizing, oh my goodness, I'm not only sick, I'm really sick. I can't do it anymore. You just take time off at this point. You take a few personal days off of work. You call the boss, you email the boss, hey, I can't come in for a few days. I am doing so bad. Step 12, you're kind of in your bed, you're at home, you're thinking. You kind of vow to yourself, I'm going to change my ways. Something has to change here. I'm going to go all in. I'm going to go all in on dividends. I'm going to downgrade my lifestyle. I'm going to do geo arbitrage. That's something I did do that worked to our benefit. Game changer, both for happiness and the dividend strategy, personally speaking. But you kind of vow to change your ways. You realize this cycle can't keep going. And so as you can see on the screen in front of you right now, that's step 12. But then, hey, you get back to step 1, and you know how it all feels sometimes when you have a really bad cold, but all of a sudden then you're feeling good? You kind of feel like a new lease on life. You're feeling, man, I feel good right now. I'm doing great. I don't have a care in the world. You feel perfectly healthy again. This is the biggest risk with step 1 because the cycle repeats. You get back to step 1 and you forget it all. You're good again. Your job's going easy. And by the time you get back from being sick, oh my goodness, the job's a little easier. I don't have as much responsibility, but I get the same pay. Oh my gosh, that bad boss that was bothering me, they let him go. Thank goodness. Things are good. And when these types of things happen, you're back in that kind of green stage of everything. You forget everything that happened kind of in the red stage. And those conclusions you made, those promises you made to yourself to go all in on dividends, you forget it. And then the cycle just keeps repeating over and over and over. And of course, everyone's cycle of modern life looks a little bit different. This is one that I drew from my personal experience in life, all the way from kind of in my 20s as a younger dude, working, kind of getting accustomed to what it's like to work in corporate America, all the way till now in my mid 40s. I'm just kind of drawing from my own experiences in life, kind of what it's like. And every time it looks a little different. Of course, it doesn't work like clockwork. Every cycle's a little different, but they usually involve many of these elements oftentimes in this type of order. But I want to share with you here something. So as you can see on the screen in front of you, in the middle of all of this, cycle, what I have there are a few kind of ovals, and those just represent, hey, there's other things in life that are going on during this time. You're not just living your job, your side hustle, your dividends, getting sick, getting healthy again. There's other things. You have balance in life. You're trying to travel and have fun. Balance. You may have a family like I do. Or you may at least, be dating or have a significant other, have friends, family and friends. You have other balance there. Balance, you're trying to stay fit, you're working out. Another balance is just life admin tasks. We all have to wash our clothes and fold our clothes, make the bed, clean the house, all that kind of stuff. So life can get very busy because you're constantly toggling not only between this 12-step cycle, but also between all these things you're trying to balance. I'll tell you, each cycle around kind of this clock, it feels longer. It's also very, very easy, especially in one's 20s, earlier years, to waste cycles. Waste them because they'll go a little quicker. You might spend a lot of time in the green zone, so you don't really get to the yellow or red zone, which means, in other terms, because this is a channel about dividend stock investing, you may not put aside as much money for dividend stocks. You may not educate yourself as much as you probably should on dividend stocks. You may not buy the right dividend stocks. You may spend a lot of money on other things. You may not invest at all. First and foremost, if that's you, please don't worry because so many of us have made these very same mistakes. The reason I'm doing this video today is I'm trying to share my own experience in life, to share it with YouTube with the hope that folks out there watching in the real world can glean some kind of insights from this video and hopefully improve upon some of the mistakes I've made over the years and at least learn from my journey at least. And so, but anyway, it's so easy in those earlier years just to have the cycle go quick, and it's kind of all the green zone, and when the yellow and red zone comes, it just goes quick. But later in life, it may slow down a bit. You may linger a little bit more on things like not feeling well, taking time off of work, or things earlier in the cycle like, boy, that new manager, he's really bothering me. I don't know how much longer I can do this anymore. And so as you can see on the screen, though, I have a few more things. And so in the middle of all of this, as the years progress, an individual can become less patient. This is a channel about investing, and so you've probably seen it with me in my earlier years on the channel. I used to invest in a lot of dividend growth stocks, lower yielders that were growing the yield quicker. In the last year, oh my goodness, I just did a update. I did an update over on Patreon. On Corner Patreon today, I shared my stock portfolio, my percentage allocation to each position. And I shared how my dividend growth went year over year in terms of percentage gain, and my dividends are up a record amount over this last year. Why is that? And I'll link to my corner Patreon in the pinned comment below, and regular Patreon, backyard Patreon too. But why is that? Why did it go up so much? It was like over 30% year over year growth in dividend income because I got impatient with the cycle. I started realizing, okay, as I invest in dividend stocks, I'm going to take on a little more risk. I went heavy in some of those sin stocks. I went heavy in some of those higher yielding stocks. I transformed the portfolio this last year. It's a one-off thing. I don't expect this to repeat in future years. It was a really unique year, if you will, but I got impatient because as you get older, you can get a little more impatient with all of this. But as you can see on the screen in front of you, I want to also share, as the years progress, the investor may opt for riskier dividend stocks to break out of the cycle quicker. Again, a perfect example, myself. Which stocks did I buy largely in 2024? I bought a lot of sin stocks, and those are riskier, very risky. I'm trading risk for yield. I'm just sharing what happens. What goes down in real life. I'm happy with the choices I made for now, but I've consciously taken on a lot of risk. I have a lot of dependence on sin stocks. Going forward, I'm going to be diversifying to lessen my risk. I want to actually share, I'm going to close out the video today with the 3 assets that I plan on buying very heavily in 2025. One of them is an ETF, one is a REIT, one is a stock. And so a dividend stock, I'll pay dividends or distributions. But anyway, I'm getting a little bit riskier with the stock selection because I've been through this cycle quite a few times. Anyway, if you're enjoying the video so far, by the way, please click the like button. And I also want to share with all of you, if you're interested in seeing this diagram up close, because I know on YouTube it might be hard to read it, I'm going to make it available for everyone. What I'm going to do is make it available on Blossom Social, which is a free social media platform for investors. It was co-founded by my personal friend, Brandon Beavis, who is the best Canadian investor, in my opinion. Along with his dad, that is. They're really a dynamic duo of investors over there in Canada. But look at the pinned comment below. I have my affiliate link. In terms of full disclosure, it's a free platform, but I get compensated when you sign up through my link. If you connect with me over there on Blossom, follow me, shoot me a message as well. I'm going to be sharing this free resource over there, this really cool diagram that I made. But also, I just look forward to seeing you on Blossom. It's a really cool app. I have a lot of fun over there. I think I'm up like 4,000 or 5,000 followers over there now. Boy, it's a strong community, and I've met a lot of new people from Canada and all over. Okay, but that's the cycles. What I want to share, though, I'm going to do one more thing. As you can see it on the screen right now, check it out. So I didn't do this. I almost put this in my diagram, but basically, it's possible to break free of this. The way you break free, or at least the way I'm breaking free, and I've really stepped it up over the last year, is quality dividend stocks. It's kind of steps 8 and 9, making sacrifices, making those trade-offs. I've gotten a little less patient. I've went towards the higher yielders. That can break and destroy this entire cycle for once and for all. Never repeat it again. Get out of that, the rat race, if you will. Get out of it. But then it creates a new cycle, a virtuous cycle. It creates a cycle of dividend investing, and dividend investing can be a snowball. You put money into dividend stocks. By doing that, the dividend stocks pay dividends. Those dividends can be reinvested to buy more shares of dividend stocks. And all along the while, you can put more money in and the quality dividend stocks increase. They tend to increase the dividends over time. And so all of these things work in parallel to create a snowball, if you will, that by the time one is ready to retire, there's a massive amount of dividends. There's this virtuous cycle. I'll link in the pinned comment below. I did a whole video on the dividend snowball. You can check it out there. It's a whole separate video. Okay, you're probably wondering, Ian, what stocks are you buying this upcoming year in 2025? Because, yeah, these cycles are cool and everything, and you're kind of well on your way to breaking free. But part of this game, obviously, is choosing and selecting wisely, buying great assets that pay dividends so that I don't have to go through this cycle again. So as you can see on the screen in front of you right now, there are 3 main assets I'm focused on this year. And I share them all really simple today. I don't have all the metrics. I just want to keep it simple because it's already a longer video. But I'm buying in terms of ETFs, SCHD. In terms of stocks, I'm buying Pfizer right now. And in terms of REITs, I'm buying Realty Income. Finally, Realty Income has come down to the mid-50s again, 55.34. I like it at this price. And so the starting yield at SCHD is 3.53%. Starting yield at Pfizer, they just increased the dividend real small, but it helps. It's 6.72%. At Realty Income, 5.72. And obviously, SCHD is increasing the dividend very quickly, about 11.6% per year on average. Pfizer and Realty Income, slow growth, kind of growing around CPI ranges, if you will. But what I plan to do with the money I'm deploying this upcoming year is I'm going to probably put about 60% or more in SCHD, and then the remainder I'll split between Pfizer and Realty Income. The weighted averages that I come up with is a blended yield, starting yield of about 4.61%, which is higher than my portfolio average. I just shared my updated portfolio on Corner Patreon. I'll link to it in the pinned comment below. But the compound annual growth rate on average will be 8.1%, which is great. I feel good with a starting yield well above my portfolio average. Also with a dividend growth rate well above my portfolio average. This is a winning combination for me. Now, I do reserve the right this next year to change strategy. There may be another ETF I buy. There may be other stocks in the portfolio that just look really attractive that I want to buy. But right now, this is kind of the 3-tiered strategy that I'm looking most closely at. But please put in the comments below, what stocks, what ETFs, what REITs are you buying in 2025? Please share with the community. And if you enjoyed the video, please don't forget to subscribe. It really means the world to me. And don't forget, head on over to Blossom Social, link in the pinned comment below. It's my affiliate link. In terms of full disclosure, I get compensated for signups, but it is free. And I'll have my diagram over there. Thank you everyone for watching. I really appreciate it. Before I go, in terms of full disclosure, I am long Pfizer, ticker PFE. I'm long Realty Income, ticker O. I'm long the ETF SCHD. Also, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed financial advisor. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market before you invest. Please consult your licensed financial advisor first. I'm just sharing my journey for fun and entertainment. I have additional disclosures, disclaimers in the description, the video description below. As always, I love you all. Thank you for watching. I'll see you in the comments below, and I'll see you in the next dividend stock investing video.